As I said, if you do have any suggestions, please do put them in the chat box. Don't sit and suffer in silence. There's no way I can help you if you don't mention anything. Andrea, an Academy member, in the chat box now. Morning, Will. Volatile Friday with CPI coming up. Yes, well, I would hope it would be volatile because, as you'll know, Andrea, we like volatility and it helps us make money. We need the markets to move and we need to trade in a controlled way so that any move, be it rash or not, is manageable. So yeah, I hope so. That's what I'm looking for because this week has been slow. It's been notably slow, and you can see that even if you do look at gold. I mean, we will go over gold now, but if you go back to Monday on gold, where are we? Monday 9 a.m. Okay, the price, you close out 1977 and you're at 1986. The range on gold this week has been about 40 bucks. Okay, so you had your massive move up, then you've got your consolidation where my Academy members start to hedge. They use their brains to collect gains on the hedge side, and it mitigates anything they got wrong before. Oh yes, what CPI? I think that's a mistake. It is not CPI today. It is core personal consumption expenditures price index month of September, and it's core personal consumption expenditures price index year on year for September. You can see that on many calendars. So I guess instead of CPI, it's CPCE. Yeah, consumer price index slightly different. So yeah, today CPCE, core personal consumption expenditures. Well pointed out, Phantom FX. You've got it right there. So gold. Let's take it back. So you've got your weekly chart open up here. You had a really nice tech zone. I called it long many times. Why did I call it long? Well, I called it long because one, you're at your 200 MA key tech area. Why is it a key tech area? Well, if you're going to fall to a 200 moving average, it's probably very likely that you've got a good long zone because the 200 moving average tracks 200 previous candles and it gives you an idea of what would be a considerably low price on the long-term market, which is exactly what you got, and it's exactly where people flooded in to get long, hence why we plan to long there ourselves. We know if we can come back to those much higher moving averages, like I said, it's very likely we've got a considerable long entry opportunity. Chris, another Academy member. Chris, great to see you. I'm not sure where you've been. I haven't seen you on the live stream lately, but it's good to see you again. As always, ask me anything you want. I've been posting a lot about the Ors 200 lately, and I trade it myself. I've added it into my portfolio. So if you've got any questions about that, let me know. Number one, 200 MA was the key tech area. Along with that was, if you go up to your higher time frames, there was key price action levels. In other words, where you've seen previous price rejection various times, it gives you a very good inclination as to what may happen in the future. But you can see it across where I've drawn this line, okay? And you've always got to look for it. You've always got to be aware of it because if you look there, you've got various candle wicks. But more importantly, if you look along here, you've got a very solid baseline, and that is what delivered price rejection. So the key thing to take away here is number one, if you're looking to long anything, you should be doing it after a fall, okay, on a dip like that. You shouldn't be buying up here. You shouldn't be buying up here. You shouldn't be buying up here. Yeah, you guessed it. I probably wouldn't consider buying up here either. Now, the key difference with what you've got now is the fact that people are very afraid of a larger breakout of war, which is very understandable. It's very unfortunate, that is the circumstance, but it affects gold in that way. Gold tends to rise when people want to put their money somewhere that they deem safe. And what you've got now is exactly that. Okay, we didn't really know that was really going to be the sentiment change when we were long. We were just buying it based on technical factors, our overall knowledge of the long-term markets. If you had it long, I would definitely be out of that trade. One big green candle, okay, where you'd think, you know what, I've got my money on the table here. Perhaps I'll lock it in. Perhaps I'll take some profit. and then you get another big green candle, and you really start to sweat a bit, and you think, you know what, really should take the money. And I'm still of the same mind. Okay, you are seeing a bit of weakness on the repush into this high. It does show you there's a bit of strength to the south side. Okay, and thus I wouldn't be surprised if this does pull down. I would be lightly short at this point, and I would probably look for a pullback to your nearest area of daily support. That's where you're likely to get a nearer term bounce. So that is my bias with gold. Anything higher, and my mind is just to short more, but do it lightly. Okay, and that is because simply, if you look back, there's no disputing that this is a very contentious area, and you've had this rejection so many times. It doesn't make sense to be buying into it. There's people who come to me and say, Will, you know, why don't, surely you should be buying these highs. Gold's coming up. Gold is coming up. Shouldn't you be buying them? But the strange thing about that is if you look at this point in August 2020, they said the same thing. Then the price fell. And then they said it again. Will, you should be buying in 2022. And then it falls. And then in 2023, Will, you should be buying. It falls again. So I'm not sure if you're missing the theme here. But when you have an extreme price, it's time to sell. Okay, you've got the highest price possible. You've got what you wanted. Get short. If you'd done that 3 times previously, you would have made money. If you bought it 3 times previously, you're wrong 3 times now. Even if you were right now, you're still wrong on the long term. Okay, and that is what I tell people all the time. Remember, it's about the long-term market. Don't get distracted in the fact that if you take a trade at a bad time like this, if you bought, and the price goes up and you go, yes, I made money. Just remember, 3 times previously, that wasn't the case. If you want to trade on the long term, you've got to be trading in line with long-term market rules, which are buy low, sell high. That's a fact. Okay. If you want to make money, do it like any other business does. They buy low and they sell high. No business buys high and then sells low, okay? Because they wouldn't make any money, would they? If you had a car dealership, they bought the cars for the most expensive price and sold them to all the consumers at the lower price, they would never make any money, okay? So don't be that guy. I would much rather be short where I've seen the market fall various times, okay? Because I'm looking for probability, and that goes on what we've seen before, okay? Now there are some great people on the internet who put some nice comments and likes on my videos. I do appreciate that, and I'm very glad to hear for a lot of people it's helping. And it should have helped because for the last 3 years since I've been posting about gold, I probably started about 2021, a couple of years ago on TradingView, we've been right and right and right and right and right, and it's because we're using the long-term probability. I called it long on the 20th. I called it long in February 23 for this, and I called it again long here. That's because we got it right before, and guess what? The probability, therefore, lies within your favour. That is why if a horse runs in a horse race and it wins, people say, you know what? It's quite fast. Perhaps it will do it again. They can't guess that until it runs. You don't know until the horse has ran and demonstrated a degree of success and consistency. Okay, and it's the same here. All you're looking for when you're looking for a potential entry in the market is success and consistency based on what you've seen occur. Okay, because otherwise it's all fiction. It's all made up. You are just guessing what will happen. Look, you've got to push there. Okay, you've got to push there. Use your eyes. Okay, use your eyes and just look at what's happened before, and it will help you very much. And funnily enough, again, it coincides with this over here. It's no coincidence that this level over here, this peak, and this one, just there, and the one on the left of it, all coincide with where you've just bounced recently. Okay, that is why people say history repeats itself in the markets, because it does. It doesn't, it's not supposed to sound cliche, it's not supposed to just sound like something people say. It's a fact. Right, so my bias remains short on gold. I wouldn't be shocked if it goes higher because of the market sentiment, but it doesn't mean I want to buy it because I'm looking for probability. It doesn't mean to say that I don't think it can go higher. I'm just prepared if it does. Therefore, I'll do all my risk management methods to withstand any significant push to the upside. That's all my members do, and it's all they're trained to do. So if you want to be one of those, go under the video, the link is there. So I'm going to go over